Andy, how will the taxpayers know in a non-for-profit? How are the taxpayers going to know what's going on with the course financially?
Well,
How do we know that? How do we know where the money's going? How would the taxpayers know? How often would you update us? When would we get those figures?
okay. You would get the figures every time we would have a board meeting, because I believe under the nonprofit, city manager would be part of the nonprofit, either the CFO or Mr. Or Alder or whoever's at it is at the time would be part of the nonprofit. Not a voting right. They would be in our meetings. They would look at our books and making sure the city is not, we didn't go borrow $10 million against the thing and we took a yacht and flew away.
And who would appoint those board members?
Council.
City council.
And
Would they be compensated?
No. No, I mean, I would never take anything in trade. Mr. Robbins back there right now, you can tell, if I grab a soda on the turn, I make sure I pay that soda when I come back inside.
No,
So
point.
I would
But
not.
for example, an auditor sitting there is going to have a fee attached to his services. I mean, that's only just.
Well, Joe,
And there's going to be
give me
other.
thousands, maybe, are you going to charge us $25,000 like the last guy? Okay.
You're going to do it for free?
To sit on that board, that would be free, yes. The board would be free.
And any work that you would have to do would be free? But would be free?
Yes.
I think we need to hear from
Typically, all these
public.
boards are free.
And they
You
were
wanna
going to be
board
sitting
something
here.
like this.
What time is it?
You serve as a volunteer.
I think Vince had a question. Did you?
Yeah, I know right now we're a lot of discussion about capital improvements, and I guess my concern too is if we know that there could be potentially $1 million worth of expenses going in with, just say, the sprinkler system, why would we accept something less than that? And I guess my follow-up question, or I guess my statement with that is, if Mr. Jaworski or any company comes in to lease this and the expenses get higher than what they expected, what power do we have to force them to make any of these repairs? And if they walk away or at the end of the lease they haven't done anything, isn't the city still on the hook? So we keep talking about responsibility and we keep talking about liability, but no matter which deal we go with, I still feel like ultimately the city is responsible, because when the creditors or whoever it is comes after people, they're going to come after us. So then you have that going on there. So at least under this non-for-profit status, what I see is there's an opportunity to pay back or not cost the taxpayers anything. We're under the Jaworski deal. We're still guaranteeing the debt payment. So if we, the taxpayers, have to pay the debt payment, how is that beneficial to us, or how does that relieve the burden off the taxpayers? That's what I'm having a hard time understanding.
They could, if Jaworski went belly up, he has other assets. They're not going to come after the city for something that he owes.
But his corporation, and I don't
separate
mean to interrupt,
entity.
but his corporation, if today's corporation went belly up, that wouldn't be his personal assets, and I don't see him
Then he
putting
goes
his
into
personal
bankruptcy,
assets
and
on the
the
line.
bankruptcy court discharges it. It
and-
doesn't come back to the city.
Yeah, you have to draw
at
the
all.
distinction, too. If Jaworski's in there and he's entering into contracts with contractors who are going to do whatever, capital improvements, or he's got contracts with people to supply the pro shop and doesn't honor those contracts, that's between them. The city doesn't get involved in that. The city would not be a party
Rick,
to
you
that.
know better than that. Anybody that does contract work, and believe me, I know this, that if you enter into a contract, if I was building your house and I didn't pay the subcontractor, that subcontractor could lien your property.
Yes, you can lien the property because that's under the state
Well,
construction
you'd be
lien
leading
law.
the city's property, so the city
No,
would have to pay for it.
You can't, because you cannot
Here's an
lien-
example that-
Andy, you can't lien city property, and a contract for the sale of any kind of personal goods between Jaworski and whomever is not a contract to which the city's a party. The city could not be sued.
Yes.
End of story.
I think a more realistic, I think what Vince is getting to is that, let's say that there is a lot of improvements that are needed. And at the end of 5 years, he's done with the lease and does not renew it. The city is obligated, because it's still your property, to make all those improvements. That's, I think, where you're coming from.
Wait,
Is that
Could you say
And
that
then
again?
what's going to happen after
let's say-
5 years, if he's in there for 3 years and he's not making any money, he's not going to put money into the course.
Yep.
And the
Mr.
course is
Riccardi
going to
wanted
be.
a clarification.
I didn't understand.
And I'm not saying this is going to happen, but I think the case that Vince is trying to make is, suppose that he's in there, and he's in there for 3 years, and he's paid you $50,000, and you've paid more than that out in taxes, so your net amount that you've received is less than zero, and you've paid the $400,000 payments. And it's not gone well, and the revenue's down to $750,000. And of course, the sprinkler system breaks, the clubhouse needs a lot of repair, and he goes and leaves the property. You have to fix all that. It's your property still. It's not
Well,
his
right where we are
obligation.
now, where the not-for-profit would be. Except the not-for-profit doesn't have any provision for capital improvements or repairs.
And if he walks away at the end of 5 years, neither does he.
But in your scenario, Mr. Costello, if we're in year 3 and Jaworski defaults on certain obligations that he has and tries to walk away from the deal, we have recourse under a lease against him.
No, I'm not
and
saying
he has
I'm saying he
assets.
walks away at the end of the lease, and then the course is in disrepair.
Okay.
Yeah,
But in your
don't
scenario where
have it-
business was declining and there were capital improvements that needed to be made and weren't made or were incompletely made, if
But, okay, I'm
Jaworski's not
saying-
in the picture, the not-for-profit has
I'm
those
saying-
same problems.
I'm saying he made the $300,000 payments, but the course needs $1.5 million
Okay?
worth of work, and he leaves. It's still your obligation to do that.
Right. And as it would be, our obligation from day one under the not-for-profit scenario.
Yeah, absolutely. Mhm.
So you're no worse off. So only if in a meltdown situation where Jaworski walked away, we are no worse off than we would be with the not-for-profit.
Well, if the not-for-profit for 3 years made the debt payments, you'd be that much better off,
But
and still in the same
well,
position.
But it's still, it's using borrowed money that the city is ultimately responsible for to pay off another debt. that the
But it's
city
not
has.
all
That's
borrowed
low.
money, though.
The
It's-
debt's
it's
lower.
like shifting a balance from one credit card to another.
No, it
one.
is not.
Okay,
You're taking a debt from $1.1 million, and the maximum on the other debt is $700,000. So you gain $400,000. The taxpayers,
one of
the
the keys
taxpayers
is
didn't
that-
have to pay.
Wait, when do you
Wait.
gain that? Because you don't have fees going forward? Is that what you mean? Where do you gain the 400,000?
The difference between 700 and the 1.1 million.
Where did that come from?
Well, 1.1 is what your debt service is, and
Yeah,
the
and then we have-
and the maximum on the proposal is $700,000.
Yeah, let's do this a different way. Let's suppose that the golf course is doing well. All the profit that the golf course makes is kept by the Jaworski firm. All the profit that nonprofit makes pays down the debt service.
And goes into the course.
Right, but you also have the other issue, if we have somebody, at least this is what I would envision or hope for, a name like Jaworski is going to bring more business into the city in general, there's going to be
That's-
that type
that's
of
ridiculous.
pass-through. Everybody says no, 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 no.
Yeah,
Well, it's
that's-
possible,
that's
yes, yes,
ridiculous.
yes, yes, yes. Yeah, yeah.
That's ridiculous. We have a Kennedy's here. They don't bring more business.